call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities. Thank you, and over to you, sir.
Thanks, Ria, and good morning, everyone, and welcome to the results conference call for Tube Investments of India for FY24. From the management, we have Mr. Vellayan Subbiah, Executive Vice Chairman for TI, Mr. Arunachalam, Executive Chairman for TI, Mr. Mukesh Ahuja, Managing Director, Mr. A.N. Meyyappan, Chief Financial Officer, Mr. K.R. Srinivasan, President and Whole-Time Director for the Metal Form Product Business, Mr. Shivdeep Singh Jammu, Vice President for TPI, Mr. N. Govindarajan, CEO for CX for Innoventure, Mr. K.K. Paul, CEO for TICMPL, Mr. S. Gopalakrishnan, CFO for TICMPL, and Mr. K. Murali, President for Business Development. To start off, I'll hand it over to Mr. Subbiah for the opening comments, and we'll start the Q&A post that. Over to you, sir.
Thank you, Anupam, and good morning, everybody. The Board of Directors of TI met yesterday and approved the financial results for the quarter and year ended March 31st, 2024. The Board has declared an interim dividend of Rs 2 per share in February 2024, and the same was paid to shareholders in March. The Board has now recommended a final dividend of Rs 150 per share, 1 rupee 50 paise per share for the financial year 2023-24. Revenue for the quarter was 1,962 crores as against 1,663 crores in the same quarter previous year. And revenue for the year was at 7,611 crores compared to 7,236 crores for the previous year. PBT for the quarter was at 318 as against 301 crores in the same quarter previous year. And PBT for the year was at 970 compared with 876 in the previous year. ROIC was at 54% for the year ended 31st March 2024 as against 55% in the previous year. Free cash flow for the quarter was 104 crores and the cumulative free cash flow for the year was 376 crores, which was 51% of that, mainly driven by additional capital expenditure in some of our existing businesses. I'll go through a quick review of the businesses. The engineering business has revenue for the quarter at 1,276 crores compared with 1,044 crores in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 160 crores as against 132 crores in the corresponding quarter of the previous year. Revenue for the full year was 4,921 crores compared with 4,562 crores, and PBIT was at 617 versus 549. That was for the engineering business. Metal Form revenue for the quarter was 386 versus 347. The PBIT for the quarter was 42 as against 45 in the corresponding quarter last year. And revenue for the full year was 1,519 compared with 1,424. And PBIT for the full year was 187 crores as against 174 crores in the previous year. The mobility business revenue for the quarter was 154 compared with 155 in the corresponding quarter, and losses before interest and tax was 9 crores as against a loss of 5 crores. Revenue for the full year was 664 compared with 800 crores for the previous year, and loss was 18 crores PBIT before interest and tax versus 17 crores the previous year. Other businesses, revenue was 230 compared to 191, and PBIT was 17 as against 11, and full year 834 crores compared to 768, and PBIT of 65 compared to 48. At a consolidated level, and that's consolidating in all of our subsidiaries, including CG Power and Shanti, and Clean Mobility. The consolidated revenue was 4,490 as against 3,778 in this quarter. And our PBT before share of profit of an associate joint venture exceptional items and tax for the quarter was 401 crores as against 403 crores in the corresponding quarter previous year. TI's consolidated revenue for the year was at 16,890 crores as against 14,964 crores in the previous year. And the profit was 1,683 crores as against 1,592 crores in the previous year. CG Power, a company in which we have a 58.05% stake, had consolidated revenue of 2,192 for the quarter as against 1,903, and PBIT was at 301 as against 281. For the year ended March 20.
Or innovations that the company is targeting to enhance our competitive edge in these areas?
In line or better than the market for the domestic market, and there is a clear-cut focus for the exports because our market share in the exports are pretty low and there is a good headroom available for growth there. And we are focusing those segments to drive the growth. As well as we are targeting in the EV evolution is happening in the country. So there are many applications which are emerging as new, and we are focused on that. And the way the EV business evolves, we'll be participating in those new opportunities, which will be in area of weight reduction, in area of the improved efficiency, because those are the new norms getting set up in the EV industry. So we are focused on it.
And so our new verticals like mobility and others, these are expected to drive the growth future. So my question is basically, can you share how the things are shaping up across the new verticals? Like, how do you expect the thing to ramp up from here? If you can just share the indicative timelines, like when are we expected to achieve the break-even in mobility, for example? Like last quarter, you mentioned Q4 will witness the growth in EV business, but we are Q1 down. So can you please put some color on it?
Yeah, so I think specifically for EV, we've articulated that we won't give any, forward-looking guidance because it's basically, there are just there's too many kind of uncertainties in the business. What we've clearly articulated for EV is that now we have two products launched. The three-wheeler product is doing well in the southern markets, and now we're entering the northern market. And we've also launched the truck, which is still kind of in its early days of kind of its sales cycle. What we've also kind of clearly articulated is that with the fundraising, and we will not depend on TI for funding, the parent standalone TI for funding in that business. So that business is pretty much self-funded now. I mean, as in, like it's funded into the entity, and so there's enough equity in TI Clean Mobility itself to fund its growth. So more than that, kind of giving specific guidance. So those are the two businesses that are selling now. We're hoping that in the next 2 quarters or so, we will get the small commercial vehicle also out, and so that's the status on that business, on the Clean Mobility business.
So what is the overall outlook for FY25? That is the last question from my end.
For Clean Mobility or for TI or for what?
For TI.
Now again, we've not, I mean, basically, we've not specifically guided, but, like I mean, the growth has been kind of in the teens, right? Kind of, what I would say is kind of in the teens is where kind of growth has been. We believe that will continue.
Okay, that's it from my side, and all the best for the future.
Thank you.
Thank you. Next question is from the line of Nikunj Agarwal from White Whale Partners. Please go ahead.
Hi, this is Hardik here. Can you hear me?
Yes, sir. Please go ahead with the question.
Okay. So just going back to the, one of the questions asked earlier in terms of how you decide on entering new businesses. I think a while ago, maybe a few quarters ago, from what I understand, the thought process was that anything related with motors and with power would be coming through CG Power and the rest of the unrelated businesses, let's say like medical equipment or even yet to that would come through Tube. But right now it seems like, has there been a change in kind of, the mindset or the thought process here in terms of how new businesses are seeded?
No, I think, the question keeps coming back to, obviously, kind of, if there's going to be anything that's going to be related to motors or power, it will naturally go to CG, right? Whereas a natural fit, I don't think there's that much of a question, right? I'm saying kind of where something may not be 100% natural fit, we will have to evaluate that fit when the opportunity comes up. And that's all we're articulating. So I don't think there's any change. We're just kind of elaborating because it's a bit difficult to kind of make a statement on where it's not so deterministic, right? I mean, so if there's a new business, if you take medical, for example, there was not a natural home in either place. It was a new business for us, right? So that's the question where, your question is like when opportunities like that present themselves, then we decide kind of, on where we think the best fit will be.
So, but then that is a bit of a change in shift, right? Like, for example, if medical equipment were to come, if you would be open to kind of possibly putting it through CG Power as well. You're open to that?
Yes. So, I mean, I think if you're asking, so I would broadly say, CG Power is fairly well defined in terms of the businesses it takes on, right? But like I said, if unrelated things come on, we will take a look at kind of where is the more natural place to house it. So yeah, if you see that.
Conversion margin, right? And so it basically growing kind of in double digits, which it's not. So anything else that's kind of weighing on the metal form product business from a profitability perspective?
Like we shared in the previous quarter, in metal form, particularly we are finding railway business is getting more competitive and that is a little bit pulling down the margin. But otherwise, all the other three business, the margin perspectives are okay. Railway, we have to yet to figure out the answer for margins.
Okay. And on the 57 crore, this is a very kind of nascent business. You would have thought like there should be a big ramp up on a sequential basis. So any issues or concerns over there?
Paul, do you want to take that?
No, I think as we said that these are newer businesses, and actually the volumes or the projections actually will start coming up as we get more traction in the market, and we are currently on that basis. With the first product that we launched in the three-wheeler, we made good progress, and gradually a lot of products will be launched this year, as Mr. Subbiah was saying. And over a period then, we will have adequate representation in the market across the different segments, be it on the heavy commercial vehicle side or the small commercial vehicle side, and then a few more variants on the three-wheeler side, followed at the end of the year with the EV tractor launch. So with all this, then we should be in a position to, garner some steady business and steady volumes, and that's the plan that we are working on.
Specifically to your question also, there was in March, for the month of March, because of the change from FAME to the new scheme, there was a drop in three-wheeler primary sales, right? Though there was an increase in secondary sales. So that would have also swung the numbers.
Okay. Got it. One last quick one. There's an approval being sought for 350 crore long-term borrowing. Is there any specific plans, to deploy that, or is it just an enabling?
No, we always kind of, at least once a year, we basically kind of take those approvals. There's no specific plan that's driving it. It's just a blanket approval that we take.
Okay, got it. Thanks so much.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Rusha from RBSA Investment Managers. Please go ahead.
Hi, sir. Looking at the company's 5 to 7 years from now, how much percentage of the total profit pool do you think would come from TI 1, 2, and 3 respectively? Is there any aspiration or target on this?
It's a bit tough to say. Ideally, we'd like to be a third, but I don't know if we kind of evolve in that way.
Okay. And sir, any traction and progress on CDMO?
72 crore kind of a spend. And in fact, we are looking at 30 crore kind of a spend. So all put together, for next year, the capex, would be around 471 crores.
471. Okay, so that's all from my side. Yeah. Thank you.
Thank you. Next question is from the line of Varun Arora from B&K Securities India Private Limited. Please go ahead.
Hi, sir. Thank you for the opportunity. So I just want to ask on the mobility segment, so how the things are panning out right now, and if you can give some outlook on that front.
Can you come up question again? Maybe your voice was not clear.
Yes, sir. I'm audible now?
Yes, better.
So I'm asking about the mobility segment. So how the things are panning out right now? On quarter-on-quarter, it was a flattish. So can we expect the pickup in the demand, or the outlook will be positive further going forward in the FY25?
So this business is going through tough phase as of now because of the market conditions. Cycle market is not growing, and we are focusing in this business also export area, which will be a little long drawn process. And also we are focusing on the e-bikes in this business. And so this is a work in progress. These are the growth area identified for the mobility business going forward.
Okay, sir. So again on lens, I guess the last participant already asked the question, but there was some news going on regarding the Apple. So any development is going on that front? Some media actually, on the newspaper there was some news going on, like in April, mid of somewhere around. So if you can give some gist on that, sir.
So as of now, we are focused on the lens business, which is basically goes in the camera module. And if any further opportunity comes, we will share with you at appropriate time.
Okay, sir. So last, just a clarification I need, by what timeline that the electric tractor will be launched and the commercial vehicle, the small commercial vehicle also will be launched, sir?
We're looking at the end of beginning of Q3 really. Actually, that's when it will get launched, both.
For electric, for both, okay? For both?
There's all commercial vehicles which will be launched sometime around July-August period. That's the period. And the first variant of the electric tractor will be launched sometime in the period of October-November of this year.
Okay, thank you, sir. So just last one. So on the, I guess, the last phone call, you have said that by the FY24, you'll have the dealership around 75 number. So have we achieved that target, or are we still on the, on the way?
Currently, you're talking about the three-wheeler.
Three-wheeler electric. Yeah, that's it. Correct.
Yeah. Currently, we are at 63 dealers against the 75. But by the end of this year, we should be about close to double of these numbers as we expand in the north and the east.
Okay, sir. Fair enough. Thank you, sir. Thank you for the question.
Thank you. Next question is from the line of Vipul Kumar A. Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. Would you repeat the CapEx numbers for TI Clean Mobility, and can you break down it for all individual products again, sir?
Yeah. See, if you look at for next year, 24-25, the total CapEx outgo would be 471 crores. If you see the breakup, three-wheeler will be 72 crores, tractor 31 crores, and small commercial vehicle business will be investing 278 crores, and in truck, medium, heavy commercial vehicle business we will be investing around 71 crores, and there will be some marginal investments in GEM and in central R&D functions. So all put together it will be around 471 crores.
So what will be the nameplate capacities for each of the business, sir? Can you quantify it, sir?
Sir, capacities, as we said earlier also, there will be, for example, the three-wheeler plant will have a capacity of 75,000, in terms of this. The small commercial vehicle plant that we are building will have a capacity. Once we have completed the entire thing, the capacity will be around 50,000 vehicles. That will be. The tractor currently has a capacity of 25,000 numbers annually, right? And IPLT once we add a line, we will have a capacity this year of around 4,500 numbers.
Last one, I didn't understand your last comment, sir.
Last comment was on IPLT. So in IPLT, we are in the process of adding one more line. With that, the capacity this year will finally get to 4,500 numbers.
Okay, sir. Thank you very much.
Thank you. Next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello, good morning. So this investment in the core business of 500 crores for this year, you mentioned earlier. So what will be that for exactly, and how will it help us?
So it will be helping us building the capabilities in the engineering as well as metal form division, which will be in terms of some money will go for capacity expansion, some money will go for capability enhancement.
Okay. And have you already started spending, like, has the CapEx already started? And that's the figure for the FY25, correct?
So most of this 500 crore will get spent in this financial year. However, some money will be work in progress, which should get spent by Q1 or Q2 of next year.
Okay. And on a consolidated level for the company, I believe you said, so you've been seeing teens growth and that should continue ahead as well. But when it comes to margins, what is the outlook there? Which businesses are you focusing on to improve those margins, EBITDA margins? So can you share a guidance or a directional outlook?
Susan, you will take this question, or maybe generally, Mr. Well answered. We don't give the future guidance, as already said that.
So what are you looking for on a consolidated basis?
I just want to know on a consolidated level, if you can provide, if not an exact guidance, but a directional outlook, how will the margins improve, which businesses will lead to that? So where is your focus when it comes to improving margins?
So broadly, I think you understand the two largest contributors to console right now are TI1 and CG, right? And both we have specific indications on what the margins are. And we continue to maintain that we maintain at least these levels of PBT margins, which are north of 13% for both businesses today. So that I do believe will broadly continue, and those are the two largest contributors. Now, obviously, when we take at a console level, we will continue to have TI Clean Mobility being the largest negative contributor, and I think that will also continue for this year. And so you'll have to just kind of make your own kind of assumptions then based on those from that combination of things.
Okay, got it. And okay, yeah, that's it. Thank you. All the best.
Thank you.
Thank you. Next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi. To the electric truck business, so I believe we were looking to start deliveries from fourth quarter. So can you talk about how many trucks did we deliver and how does the order book look like?
See, currently we have about 70 trucks on the road, all so far. And the order book that we have is close to about 35-40, which we are in the process of executing now in the month of, May and June. That's where we are at. And we are working around with a number of customers, large customers, in terms of, proving the concept actually, because this we'll have to prove the concept. Then we'll have to look at, what the savings are, demonstrate that. That's the kind of work that's going on when we are quite hopeful of building traction in the coming months, because these results are coming out very favorable when you compare it with the current ICE vehicles, what they are deploying. So that's as far as IPL is concerned.
Okay, so would it be fair to say that IPL Tech effectively probably will get into a material ramp-up mode only by end of this financial year or early next financial year, given that the process of customer approvals and all those things will take at least another 6 to 9 months?
Part of the work is in the process. Some of this is a new concept. So one is they will issue a, if it clicks big way, it takes a little time. There's a diffusion time that takes for people to absorb, to change some behavior, in terms of adoption. The benefit is very clear. That's the good news. Now we'll have to get them in terms of we're working around different models to see how, the adoption can start happening. And once a few adoptions that we have succeeded starts happening, there definitely will be others that will come into the picture. So that's where it is. We are hopeful of building up good volumes, but difficult to say at this moment what that will be. Nor would I like to say that. But works on in terms of building the pipeline.
Got it. And lastly, when we talk of the EV business, we have talked about investing of roughly 3,000 crore into this business. And so far, if I see it, we have invested close to 1,900 crore. That's what the assets for the EV business referred to. If I knock off cash, then close to about 1,200 crore. So incrementally, balance capex beyond this 470-500 crores of this financial year, what it could be going forward? Is this plan of 3,000 crore investment largely firm, or this will depend on how the business ramps up going forward?
Beyond this, but I think there will still be more development of vehicle development. So R&D will be there, and then obviously the build out of the businesses themselves.
Okay. Got it. Great. Thanks and all the best.
Thank you.
Thank you. Next question is from the line of CA Garvit Goyal from Invest Analysis Advisories LLP. Please go ahead.
Hello.
Yes, sir. Please go ahead with your question.
My questions are answered.
Thank you. Next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Largely on the three-wheeler electric vehicle industry, if you see what we understand is that FAME was the adoption. Now that is under uncertainty and incentives are coming down. do you think that without FAME incentives also EV penetration can pick up in three-wheelers, or it will be slower than what you would have thought earlier? And do we have the PLI benefits that we will get in three-wheeler business, or it's not there?
There are two parts to your question. The first part is currently we don't have a PLI benefit as such in terms of this, in the three-wheeler business. That's number one. Number two is, see, the FAME has already come down. There are different component prices that are moving down, primarily the battery. So that should go a long way in building, giving some stability to the prices. That's the second piece. The third piece is, the TCO portion. That means the benefit to the customer, what we are seeing, is reasonably substantial. And we believe that from the experiences that we've got, there will be good traction. How much it will be, in what way it will be, we'll have to see as things turn out. The success really will work around how you handle a combination of factors, the range, and the performance and the customer service and so many other areas linked with the customer experience. That should help us to, get through with the numbers that we are doing. Temporarily, yes, there will be a setback in FAME, but FAME is not completely gone. It's got reduced now. And, once the elections are through, I'm sure the government will work out some policies for some more time at least, till the EV adoption, as per their plans that they have made, it starts stabilizing. Along with that, we have to bear in mind that the charging infrastructure and many of these things are in active development, and if this starts developing, in a larger way, then that provides an opportunity for you to, right size your that and therefore your cost. And therefore, a lot of that disadvantage one can obviate, actually.
Okay. Thank you for the detailed answer. So just one follow-up. After FAME incentives got reduced, did you take price hikes, or you basically absorbed it given the reduction in battery prices and other cost reduction that you have talked about?
So we did take a price hike. We took, and industry also took. And part of that absorption we did take, by ourselves for a certain period of time. But we are also in the plan of seeing, in what way, a bill of materials we can shape up so that we don't have that effort beyond the first half of this year.
Okay, thank you so much.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments.
No, nothing specific from my end. I'll turn it back to you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.